All right, what's up, YouTube? It's Teddy from SFT, and we are back with Friday's trade. I said I wasn't going to trade today, or I was going to try to maybe trade in the morning, which I did. I actually got in front of the charts at about 6:45 this morning. I didn't like price action. It was very choppy, essentially, so I was just basically stayed off the charts. I did watch it, though, until about 8:30, and then I had to go on to do a couple personal things for the day, and I came back around 1:30. So I'm happy, number one, that I didn't force a trade first thing in the morning because I was eager to get in and try to make up for yesterday's loss. But I wind up staying out of the market because it was too choppy. A lot of times you'll see at 7 a.m. there's a nice move, the decent amount of liquidity that comes in around 7 a.m. Eastern time. I don't really trade that around that time. I used to when I first started out, but I've really restrained myself to try to just trade during the New York session, the early session. But because I couldn't really trade during the early session or the New York session today, I decided, you know what, let me try to get on the 7 a.m. move and see if I could get a setup. And I didn't get it. So I came back in the afternoon about 1:30, and I was looking at the charts, and I'll show you what I was looking at. I had a perfect setup. I took it, and I went break even because I was like, I'm like, nah, I don't trust it, and I didn't want to take another loss after yesterday's two losses. So I was being overly cautious, which sometimes could bite you in the ass, right? So this is the whole mental part of trading, like you take two losses, you got to come back with the mindset of like, forget about those losses and just go, but I'm dealing with a small amount of drawdown. When you trade with these prop firms, that you're dealing with such a small amount of drawdown. You want to try to really, just manage that drawdown. So you don't want to really get it too low because you could blow the accounts, and I've blown accounts, so it's not fun. So I'm being overly cautious. I really want to get this to the first withdrawal, which is a minimum of $10,000 across all 20 accounts. That's the goal. With the goal being to get to that point and then build it back up to 2,600 and then take out like a $52,000 withdrawal as the next withdrawal over that next 8-day trading period, maybe 10-day trading period, whatever it takes to get back to that 2,600. So that's the goal. And I'm hoping to hit that. So I'm being very, very, very cautious on trying to, not lose this drawdown essentially. So let's dive into the charts here, and I'll show you kind of what happened today. It was basically a break-even trade, and I'll kind of show you what I was looking at. So it was a very bullish day, but a lot different from yesterday's bullish day. Yesterday was just basically just traded up the entire day. As you can see here, it was just basically straight up the entire day. We did have some moves here, but it was, again, bullish. So I was being very, very cautious in reference to market structure. It was because of yesterday. I tried to fade that move. I was like, I'm not doing it. So as you can see here in the morning, so 7 a.m., you can see we did get this one move, like right around 7 o'clock, you can see, but it was bearish going into that move, and it was like a reversal move. So again, because of the prior day, I was being very cautious. Like, all right, I'm not going to take this reversal move because I got crushed trying to fade yesterday's move. I'm not going to get crushed trying to fade this short and go long here. So I take it. Let's see here. Yeah, so if you see here at 7 a.m., we'll look, we're on a 3-minute chart. We had this push down, and it was, we had a nice move down, off the money line. That's my custom indicator that I built out. It's basically just a custom EMA. It's similar to a VWAP, but if you compare it to a VWAP, it's definitely different. And the price, as you can see, reacts off this line a lot. And that's the move that happened in the afternoon, which I'm going to show you. It was actually a money line move, which is one of my moves I like to take, but I just didn't have the confidence to stay in it, and I went break even. But essentially, yeah, I didn't take this reversal move. I watched it, and then I didn't really get a short setup here for me. I thought this move was too strong, so I thought that maybe this was going to be like a small retracement, and then it was going to reverse. I was just being overly cautious, so I didn't take any of these. I mean, I had this hammer down candle here, this bearish hammer. I could have took that as a short. That definitely would have played out. Even a 1 to 2 would have definitely hit. So there was moves there, but I didn't take it, and then I had to walk away from the charts. But you can see here throughout the day, we were very bullish. So going into like even a 9-minute chart, just going a higher time frame. Sometimes I look at it either the 9 or the 15 minute to kind of keep an eye on it to see what's going on. And if you see here, I mean, this thing was bullish all day. So we were making higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, pretty much the entire day, right? So we were very bullish. I got into the charts right around this candle here. So, and again, because we were so bullish, there was no way I was taking this short. It was a pretty aggressive short all the way down to the money line. And look what happened. the price just bounced off it. We had this bullish engulfing. I was tempting to take it, but I was like, you know what? Sometimes they get faked out. So I'll show you over here, which I was looking at previously. See this one right here. So you can see this candle here. It literally bounced off the money line. We're in bullish market structure. If you would have taken this with an entry at the close and stop loss at the low, you can see here, you would have been taken out. You know, if you had, even if you had to stop loss at the low, this candle here, your stop loss would have been hit the very next candle. So I saw that, right? So I was paying attention to that, right? I'm looking back on the chart. I'm like, ooh, that would have been one of my setups. I would have taken that. So when I saw this, I was like, oh, I'm not doing it. Like, I'm not gonna have this happen to me here. So I hesitated, and of course, it traded right up. And then to start to do this consolidation thing, I contemplated shorting it, thinking that maybe this was a lower high here and it was going to roll over, which it did, but it didn't roll over to a bearish market structure because it didn't break this low here. Even though this low was broke, but you could see temporarily it traded right back up. And, you know, again, we were bullish on the higher time frame market structure. So I was looking for a long setup. I was very close to taking this breakout here, and I'm happy I didn't because it traded right down against me if I would have got in it. Then I just watched price just basically trade down, and right to the money line indicator, same exact setup came. So I was like, all right, that's it. I'm taking this trade. So you can see here, if I show you on trade, it was literally, it'll show you the exact candle here. This is where I entered. It was on the 345 candle right here. So that's this candle right here, 345. I essentially put a limit order at the top of this wick here, which sometimes I'll do that. I'll put a limit order instead of entering at the close, because if you enter at the close, you can see how much further your profit is going to go, right? Because you have a bigger stop loss, right? So if you're measuring your stop loss to see how big of a stop loss you need, you're looking at 104 ticks, 26 points, as opposed to if you catch it at this wick here, which would be like an immediate rebalance, essentially. If the candle trades down, it hits this wick and it trades back up. That's considered an immediate rebalance, which is very bullish. And you can see here when you do that, you're looking at only 83 ticks and 20 points. So that means your take profit is not as far away, right? So I like to try to keep it as tight as possible, but not too tight to where you're going to get taken out. And because I did that, as soon as the price started to trade down, I was like, oh man, this thing's going to trade right down. It's going to take me out. And I'm going to take a three, basically my third loss in a row from yesterday, 2 yesterday, then 1 today. So I decided to get out of this trade inside of this candle. As you can see here, I pretty much got out. I guess I got out in the very next candle here, but basically break even. I just hesitated, and this thing just took off, which is very, very frustrating because it would have easily went for a 2-to-1 risk to reward. So it was a frustrating trade for me because that would have put back $600 into the account, which would have been very helpful for the challenge. But overall, I can't be mad about it. I'm 3 weeks into it. This is $1,000 across 20 accounts, so we're looking at basically $20,000 over the 20 accounts. So 20 grand over, a 3-week period. That's not horrible. I'll take that. I'm happy that the account's still alive. I have $1,700 in drawdown. So if you come into Tradevate, you can look over here. It tells you what your max drawdown is. $1,733 is what I have available. So if I'm risking $300 a trade, that gives me a decent amount of losses in a row before I blow this account. But 2 losses in a day, that'll bring me down to 1,000. But it goes quick, it does go quick. That's the thing with these prop firms. You're not playing with a lot of money. Now, if I was trading in my live account, when I first started trading, I was risking anywhere from $1,000 to $2,000 per trade. Same type of trading I was doing. And I was risking anywhere from $1,000 to $2,000 a trade, which was insane. And I traded that way for months, and I was profitable, and I took money off the table, but I wind up at the end blowing the accounts. I took too much money out and withdrawals and left myself with a little bit of money, and I was over leveraging for sure. I was trading anywhere from, I had 20 grand in the account. I'd trade with 15 contracts, 10 contracts, way too many contracts. So I learned my lesson there, and that's when I got involved with the prop firms. With the prop firms, what happens is, you could play with a lot less money, but you're dealing with a lot less drawdown, risk essentially, so you're trading with a lot less. And that's why I like the 20 accounts, because the leverage with all the accounts you get is nice. And the total investment on this 20 pack is essentially, I don't know the numbers off the top of my head, but it was somewhere around $2,500 total with the evaluation and also the PA fee that they charge once you pass the evaluation. So I'm into it for about $2,500, and I've been trading for 3 weeks with $2,500. So for me, for someone who was risking the $1,000, $2,000 per trade, to trade for 3 weeks with $2,500, I'm happy with that outcome. The goal is obviously to get to a withdrawal, take the first 10 grand off the table, put a little bit of money in the account, and then go for the next target, which is going to be another 2,600 over an 8 to 10 day period, which would give me a withdrawal of $52,000. So that's the goal. That's what I'm working towards. And I'm looking forward to getting back in front of the charts next week. Like I said, I won't be making any videos the first half of the week, maybe even the whole week. We'll see. But looking forward to get back into it and getting back at this challenge and getting to that first withdrawal.